Welcome back to the channel. Today we've got Dan Ives, Global Head of Tech Research at Wedbush Securities, on CNBC saying that any AI bubble fears are now out the window after what he calls a masterpiece quarter from Nvidia. I'm going to show you that clip in a minute. Then I'll walk you through my own detailed breakdown and reaction to everything he said. After my take, I'll dive into an in-depth analysis of unstoppable AI stocks to buy now and explain why I think they matter. If you only watch one video today, make sure this is the one, and watch all the way through. Smash the like button, let's get 1,000 likes on this one, share the video, and drop your thoughts in the comments below. Don't forget to subscribe, so you do not miss the next important investing update. Alright, let us hear what Dan Ives has to say.
Dan, you know, Nvidia's numbers really capped an earnings season where these companies pretty much did everything they were expected to do and more. Recommitting to the AI trade, essentially saying that they're still enthusiastic about it. Why is the market in general not really giving them credit for it?
Look, first, I think that was a masterpiece quarter, right? And I think any worries about the AI bubble thrown out the window in terms of fundamentally, when you heard from Godfather of AI, Jensen Nvidia, look, I think it speaks, and you've talked about a lot on the show, like worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia, this is third inning, top of the third, one out of this AI game, and that's why I just think names like Nvidia. Days like today, you buy names like Oracle, Microsoft, Nvidia, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if Nvidia's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8-10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think Street's underestimating numbers anywhere from 15 to 20%.
Right.
Next to 12
but is that
months.
not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I do think it's a little more than hope, because the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake, so you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same with the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, I was going to get to Alphabet because that's a really fascinating situation, how it's gotten revalued higher, tremendous amount of sponsorship all of a sudden of this name that people really had a lot of skepticism about not that long ago. Now, their new model is getting raves, I guess, in terms of its performance, the new Gemini. And also, they did it, kind of with their own processors. So how does that play into the whole, NVIDIA at the center of this question?
Sure. Well, NVIDIA obviously fueling its centerpiece in terms of one chip in the world, but the reality is Alphabet, you go back 6-8 months ago, New York City cab drivers bearish on it, right? So it's one, AI that is ultimately going to destruct the model. The opposites happen. I mean, I think now you see Sundar and what's happening at Google, they're on the offensive. I mean, you look at what they've done with Gemini, this is just the start, because the reality is in Cupertino for Apple, who are they going in for AI? It's just a matter of time until they do the Google Gemini deal as well.
Yeah.
So that's why you've seen that stock at continue re-rating. Bull case $400. My colleague Scott Dev and I, we've done a lot of work. Look, I believe this is one this is a name you continue to own, just still early days.
And then when it comes to Apple, because you mentioned it's an arms race, well, they're not really participating, at least in terms of the gross dollars being funneled in that direction.
Yeah, I think yet.
Yeah.
I think now it comes down to, like, obviously iPhone 17's been almost a sleeper upgrade cycle, but you have the biggest install base in the world. Monetization is right now on the verge. 2.4 billion iOS devices, 1.5 billion iPhones. The consumer AI revolution will go through Apple and Cook, but it all comes down to Gemini. And now that DOJ, that has cleared, that gives them the opportunity to walk down the aisle and ultimately ink that partnership. We said that's worth $75 to $100 for Apple stock. That's why I continue to view that as just a must-own name here.
What Dan Ives starts with is essentially a big statement. Nvidia just put out a masterful earnings quarter. In his view, their results erased any fears of an AI bubble. He is basically saying that the godfather of AI, as he calls Nvidia, proved through their numbers that this is not hype. It is real demand, it is real spending, and it is still only the beginning. But then he addresses the big question everyone has been asking. If these numbers were so strong, why is the market not rewarding these stocks as aggressively as before? And his answer comes down to fear. Fear of circular financing, fear that data centers cannot keep up, fear that maybe companies will hit capacity walls. But in his mind, none of those fears override what he's seeing on the ground. Dan Ives says point blank that we are in the top of the third inning of the AI cycle. Think about how early that is. Top of the third inning. And he says it with confidence because he just spent weeks in Asia looking at first-hand demand. To him, the puzzle pieces all point in the same direction. This is early, and the big names like Nvidia, Microsoft, and Oracle still have years of growth left. In fact, he believes this tech bull market still has another 2 years ahead of it. Then the interviewer brings up a deeper concern, something many investors have been quietly wondering. Nvidia is crushing it, yes, but how confident can we be about all the customers pouring billions into these chips? How certain are we that these companies spending all this money will actually get the return, or even know how they are going to get it? Dan Ives does not deny the question. Instead, he reframes it by pointing out how early adoption still is. Only 3% of US companies have begun their AI journey. Europe is at 0. Asia, excluding China, is below 1%. And when you zoom out like that, you realize the entire AI boom we are watching is coming from the tiniest fraction of global enterprises. That is why demand for Nvidia chips is still outpacing supply by 12 to 1. That ratio alone tells you why he is not worried. In his view, the amount of money that will be spent on AI in the next 2 or 3 years will exceed what has been spent in the last 8 or 10 years combined. So while the bears sit on the sidelines waiting for signs of weakness, he believes they will continue to watch this AI party without ever stepping inside. He even says Wall Street is still underestimating Nvidia's numbers by 15 to 20% for next year. Then comes one of the most interesting parts of the interview. The interviewer asks, if all this spending is great for Nvidia and the infrastructure players, could it actually be a problem for companies like Meta and Microsoft who need to spend non-stop just to stay competitive? Dan Ives pushes back on that idea. He says it is not just hope driving this spending anymore. The use cases are exploding. He mentions Palantir, MongoDB, Snowflake. These companies are living proof that AI adoption is scaling fast. It is not theoretical. It is happening in real time. He believes this is an arms race, and anytime you have a technological arms race, spending does not slow down. It accelerates. He even says that Meta, despite all the concerns, looks like a table pounder stock for the next year or year and a half, similar to what we saw with Alphabet recently. And speaking of Alphabet, Dan Ives gets very animated about their turnaround. Not too long ago, he says, even a New York City cab driver was bearish on Alphabet. That is how low sentiment had gotten, but now their new Gemini model is performing extremely well. They built it using their own internal processors. They have shifted from being on the defensive to being on the offensive. And in his words, this is still only the beginning for them. He even drops a big prediction. He thinks it is only a matter of time before Apple taps into Gemini as its main AI engine. The moment Apple signs that deal, in his view, Alphabet's stock will continue toward its bullish price target of $400. That is why he calls Alphabet a name investors should continue to own, not sell. Then the conversation moves to Apple. The interviewer points out something many investors feel uneasy about. Apple is not participating in this so-called arms race with the same intensity. They are not spending the enormous sums that competitors like Meta or Microsoft are spending. Dan Ives agrees. He says Apple has been quiet, maybe too quiet, but adds one important word: yet. He believes Apple has been preparing for a major shift in how AI integrates into its ecosystem. He talks about a sleeper upgrade cycle with the iPhone 17, but then he points out the real advantage that no other company can match. Apple controls the biggest install base of consumer devices on Earth, 2.4 billion iOS devices, 1.5 billion iPhones. That is where he says the consumer AI revolution will happen, and he believes Apple will run that revolution through Gemini once the partnership is fully locked in. So what does all of this mean? Dan Ives is telling us that despite all the noise, despite the market hesitations, despite the fears about spending, the AI story is still barely getting started. Nvidia is still the centerpiece. Alphabet is reawakening. Meta and Microsoft are not overspending, they are competing. Apple is quietly preparing to move, and the next 2 to 3 years, according to him, will be bigger than the last decade combined. What he is really saying is that this is not the late stage of the AI boom. This is the early foundation. This is the setup for the next chapter. And to him, the bears waiting for the collapse will continue to be disappointed because the use cases, the demand, and the global adoption wave are all still ahead of us. That is the big picture he is painting, and whether you agree or not, it is one of the most bullish and cohesive views on the AI economy that we have heard in months. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now, let's dive into the 3 unstoppable AI stock to buy now. Let's kick things off with our first pick, Advanced Micro Devices, ticker AMD. This company has become a true force in the world of high-performance computing, and its story is nothing short of remarkable. For years, AMD was the scrappy underdog, always fighting for relevance against much larger competitors, but over the past decade, it's transformed into a heavyweight contender, especially in the booming AI and data center markets. While many people still associate AMD with gaming CPUs and graphics cards, the real story is their aggressive push into AI chips designed for massive data centers. These chips are the engines powering the next generation of artificial intelligence. The AI boom is creating an insatiable demand for computing power. Think about training enormous models like ChatGPT, running AI art generators, or powering real-time language translation. All of this requires hardware that can handle mind-boggling amounts of data and calculations. For a long time, one company dominated this market, but AMD's MI300 series of accelerators is changing the game. These chips are built from the ground up for AI, offering incredible performance and efficiency. Tech giants like Microsoft, Meta, and Oracle are already adopting AMD's chips for their most demanding AI workloads. These partnerships are a testament to AMD's growing reputation for reliability and innovation. That's a huge vote of confidence from some of the world's most influential companies, and it signals a major shift in the competitive landscape. The AI chip market is projected to be worth hundreds of billions of dollars in the coming years, and AMD is grabbing a bigger slice every quarter. Their momentum is undeniable, and the numbers are starting to reflect that. Under the visionary leadership of CEO Lisa Su, AMD has pulled off one of the greatest turnarounds in tech history. She took the company from the brink of irrelevance and transformed it into a global innovation leader. Their core businesses in PCs and gaming remain strong, providing a solid foundation of revenue and brand loyalty. This stability allows AMD to invest heavily in AI and data center technologies, fueling even more growth. AMD's revenue is surging, and Wall Street analysts keep raising their forecasts as demand for AI chips explodes. The company's financials are stronger than ever, and the growth story is just getting started. Despite all this momentum, AMD's valuation is still reasonable compared to other AI giants. That means there's still plenty of room for upside as the market catches on to their potential. The acquisition of Xilinx was a game changer, adding adaptive computing and programmable chips to AMD's arsenal. This move expanded their reach into new markets like automotive, aerospace, and 5G infrastructure. AMD isn't just selling chips, they're building a complete ecosystem for high-performance computing. Their products now span everything from consumer devices to enterprise servers and cloud infrastructure. This integrated approach is a huge selling point for enterprise customers who want seamless solutions that can scale with their needs. AMD is now a key architect of the AI revolution, not just a participant. Their technology is helping to shape the future of how we work, play, and interact with machines. Their culture of engineering excellence and relentless innovation is their ultimate edge. AMD's teams are constantly pushing boundaries, setting new standards for what's possible in computing. Investing in AMD is like buying the shovels in a gold rush. The AI gold rush is happening right now, and AMD is supplying the essential tools that everyone needs to compete. The competition is fierce, with new players entering the market all the time, but AMD keeps winning major contracts and pushing the boundaries of what's possible. This isn't just a short-term pop or a speculative bet, it's the beginning of a long-term growth story that could reshape the entire tech landscape. AMD's chips are powering everything from next-gen gaming consoles to cutting-edge scientific research and the AI revolution itself. Their technology is everywhere, often behind the scenes, making the impossible possible. Advanced Micro Devices comes in with a market capitalization of $331.76 billion, earnings per share of $1.92, a price-to-earnings ratio of 106.14, and revenue of $25.78 billion in 2024, with net income of $1.64 billion. What those figures show is a company that is generating meaningful top-line growth while investors are paying a premium for future earnings. The revenue and net income confirm AMD is monetizing demand, but the elevated P/E ratio signals the market is pricing in continued acceleration and execution. For an investor, that means you need conviction in AMD, delivering on margin expansion and product cycles that keep them competitive against the other chip players. As you build your AI portfolio, AMD deserves a top spot. It's a company with the vision, the products, and the momentum to lead in this new era. It's a blend of explosive growth, relentless innovation, and strategic positioning that's hard to beat in today's market. Don't sleep on AMD. The market is just waking up to its true potential, and the next chapter could be even more exciting. This stock could be a cornerstone of your portfolio for the next decade, offering both stability and explosive upside as AI continues to reshape the world. The AI tailwinds are strong, and AMD is perfectly positioned to ride the wave. Their leadership, innovation, and partnerships put them at the center of this technological revolution. That's why AMD is my first unstoppable AI pick, and why it should be on your radar as well. Next up is a company that's absolutely critical to the backbone of AI infrastructure, yet it rarely gets the attention it deserves. Broadcom, ticker AVGO. While the headlines are often dominated by chip designers and cloud giants, Broadcom quietly powers the digital world behind the scenes, making it one of the most influential but underappreciated players in the AI revolution. If AMD is selling the shovels in the AI gold rush, Broadcom is building the railroad that moves the gold. Their technology forms the essential infrastructure that allows data to flow seamlessly, efficiently, and securely, making them the unsung hero of the digital economy. Broadcom is a true powerhouse in both semiconductors and infrastructure software. They design and manufacture the high-performance chips and networking solutions that are absolutely essential for moving massive amounts of data at lightning speed. Without Broadcom's innovations, the AI workloads that power everything from search engines to self-driving cars would grind to a halt. In today's AI era, data centers need much more than just fast processors. They require ultra-fast, reliable networking hardware to keep up with the explosive growth in data. Broadcom dominates this space, providing the switches, routers, and connectivity solutions that keep the world's largest data centers running smoothly. Their high-speed switches, advanced routers, and custom silicon chips are the backbone of AI and machine learning workloads. These products are engineered for maximum performance and reliability, ensuring that data can move quickly and efficiently between thousands of servers. Tech giants, like Google and Meta, rely heavily on Broadcom for custom chips tailored to their unique AI needs. These deep, sticky partnerships are built on years of collaboration and trust, making Broadcom an indispensable partner for the world's most innovative companies. This custom silicon business is a massive growth driver for Broadcom. Their world-class engineering talent and deep expertise in chip design give them a defensible moat, allowing them to stay ahead of competitors and deliver solutions that are perfectly tailored to their customers' needs. Financially, Broadcom is a cash flow machine. The company is renowned for its strong profitability, robust margins, and a steadily growing dividend. For investors, this means a rare combination of high-tech growth and reliable income, a blend that's hard to find in the fast-moving world of technology. Their recent acquisition of VMware is a game-changer, expanding Broadcom's reach deep into enterprise software. This move allows them to offer integrated solutions for private and hybrid cloud AI, positioning Broadcom as a one-stop shop for companies looking to modernize their IT infrastructure. The VMware deal creates huge cross-selling opportunities, letting Broadcom bundle its hardware and software offerings. This makes their ecosystem even stickier, locking in customers and driving long-term growth. At the helm is CEO Hock Tan, a master of strategic acquisitions and operational efficiency. Under his leadership, Broadcom has consistently outperformed expectations, delivering value to shareholders and cementing its place as a global technology leader. Broadcom is riding multiple powerful trends: AI networking, custom silicon, and enterprise software. Each of these areas is experiencing explosive growth, and Broadcom is uniquely positioned to capture value from all of them. Their Tomahawk and Jericho switch chips have become industry standards for high-performance data centers. These chips are the go-to choice for companies that need the fastest, most reliable networking solutions for their AI workloads. As AI workloads continue to grow exponentially, the demand for Broadcom's networking products is absolutely skyrocketing. Every new AI application, every expansion of cloud infrastructure drives more business to Broadcom. Broadcom has deep, long-standing relationships with all the major cloud providers, AWS, Azure, Google Cloud, and boasts a massive patent portfolio. This makes them incredibly tough to compete with and ensures a steady stream of business from the world's largest tech companies. Broadcom sits in a different league size-wise with a market capitalization of $1.6 trillion, earnings per share of $3.91, a price-to-earnings ratio of 87.01, and revenue of $51.57 billion in 2024, with net income of $5.89 billion. Broadcom is operating at scale and producing strong cash flow, and the numbers reflect a company that commands a high multiple because of predictable enterprise revenue streams and strategic software acquisitions that diversify its semiconductor base. That sizable net income versus revenue ratio is a sign of operational leverage, which is exactly the kind of profile investors pay up for when they want exposure to infrastructure spending without the volatility of pure-play fabless chip makers. For investors, Broadcom offers a rare and attractive combination: the growth potential of a leading tech stock, paired with a substantial and growing dividend. It's a compelling package for anyone looking to invest in the future of technology. Think of Broadcom as a picks and shovels play with a toll road attached. They profit from every surge in AI data traffic, no matter which applications or platforms are leading the charge. The market is finally starting to recognize Broadcom's value, but there's still a long runway for growth ahead. As AI adoption accelerates, Broadcom's role will only become more central and more lucrative. As the VMware integration pays off and AI networking revenue explodes, expect Broadcom's stock to be re-rated even higher. The company is set to benefit from multiple tailwinds converging at once. Broadcom sits at the intersection of hardware and software, a uniquely powerful place to be in the AI age. This strategic position allows them to influence and profit from every layer of the digital stack. They quietly execute and deliver, capturing massive value from the AI boom while avoiding the hype and volatility that often plagues other tech stocks. For investors, Broadcom is a must-own blue chip for the AI era. It's a company that combines stability, innovation, and growth in a way that few others can match. Their market leadership, financial discipline, and strategic vision are truly world-class. Broadcom's management team has a proven track record of making smart, value-creating decisions. Broadcom is an essential partner for anyone building AI at scale. Their products and expertise are woven into the fabric of the modern digital world. If you want exposure to the core infrastructure of AI, Broadcom is a top pick. It's a company that's both foundational and forward-looking. Don't overlook this unseen giant. It's absolutely fundamental to the AI revolution, quietly enabling the breakthroughs that are shaping our future. That's why Broadcom is my second unstoppable AI stock, a company that's powering the AI age from behind the scenes, and one that deserves a place in any forward-thinking portfolio. Our third unstoppable AI stock is a hidden gem powering the AI supply chain, Celestica, ticker CLS. While it may not be a name you hear every day, Celestica is quietly becoming one of the most important players in the global technology ecosystem, especially as artificial intelligence transforms the world. Celestica isn't a household name, but it's a giant in electronics manufacturing services, building the complex hardware for top tech brands, from the devices in your pocket to the servers powering the cloud. Celestica's fingerprints are everywhere, even if you don't see their logo on the final product. Over the past decade, the company has pivoted from low-margin, commoditized manufacturing to high-margin, complex AI and data center infrastructure. This strategic shift has completely transformed Celestica's business, positioning it at the heart of the AI hardware revolution. When semiconductor giants like AMD or Broadcom design cutting-edge chips, they turn to Celestica to build them at scale and with precision. Celestica's expertise ensures these advanced components are manufactured to the highest standards, ready to power the next generation of AI applications. Celestica assembles the servers, switches, and storage systems that power the world's AI data centers. These are the backbone of the digital economy, enabling everything from cloud computing to machine learning breakthroughs. As AI infrastructure spending explodes, Celestica is a direct beneficiary. Every new data center, every AI upgrade, and every expansion in cloud capacity means more business for Celestica. Their advanced facilities and engineering expertise make them a key partner for the biggest names in AI hardware. Celestica's ability to deliver at scale, with speed and reliability, sets it apart from smaller competitors. The company's operating leverage is huge. Investments in high-tech facilities are now paying off as AI orders surge. Automation and robotics have made their production lines more efficient, allowing them to ramp up output without sacrificing quality. Profit margins are expanding, and financial results are smashing expectations quarter after quarter. Celestica's earnings growth is outpacing many of its peers, and Wall Street is starting to take notice. Management says we're still in the early innings of a multi-year AI growth cycle. They see enormous runway ahead as demand for AI hardware accelerates globally, and they're investing aggressively to capture this opportunity. Celestica is the crucial final link in the supply chain, turning high-tech parts into powerful, deployable systems. Without companies like Celestica, the AI revolution would grind to a halt. Someone has to build the physical infrastructure. Their deep partnerships with customers make their business sticky and predictable. Long-term contracts and collaborative engineering mean customers keep coming back year after year. Working with multiple AI leaders gives them a diversified, resilient customer base. They're not tied to the fortunes of any single company, which helps smooth out the ups and downs of the tech cycle. Even after a strong run, Celestica's valuation remains attractive given the growth ahead. The market is only beginning to appreciate the scale of their opportunity in AI hardware. What's more, Celestica's commitment to quality and innovation means they're constantly improving their processes. This focus on excellence helps them win new business and maintain their edge in a competitive industry. This is a classic turnaround story. Once a forgotten manufacturer, now a specialized high-margin AI partner. Their transformation is a blueprint for how legacy companies can reinvent themselves for the digital age. Their management team deserves credit for seeing the AI wave early and repositioning the company. Visionary leadership has been key to Celestica's resurgence and ongoing success. Celestica's global manufacturing scale is a major barrier to entry. Competitors can't just jump in overnight. Their network of facilities spans continents, allowing them to serve customers wherever they operate. As tech giants pour billions into AI data centers, Celestica is on the receiving end of this historic investment cycle. Every new facility built is another opportunity for Celestica to supply the essential hardware. This is a direct, tangible way to play the AI boom, betting on the hardware demand that powers everything else. Software may get the headlines, but none of it works without the physical infrastructure Celestica provides. The company keeps innovating, investing in robotics and automation to boost efficiency and margins. These investments not only cut costs but also allow Celestica to take on more complex, higher-value projects. Celestica's market capitalization is $32.21 billion, earnings per share of $6.16, a price-to-earnings ratio of 45.46, revenue of $9.64 billion in 2024, and net income of $428 million. Celestica's numbers point to a company with healthy profitability but operating on thinner absolute dollars compared to the giants. The P/E ratio in the mid-40s suggests growth expectations remain intact but are more modest relative to the pure infrastructure winners. For investors looking at the manufacturing and services layer of the AI ecosystem, Celestica represents exposure to rising hardware demand without the same valuation premium as the hyperscalers or the dominant chip players. For investors who miss the big-name AI stocks, Celestica is a fresh, under-the-radar opportunity. It's a chance to get in early on a company that's still flying below most people's radar. The risk is tied to data center spending, but all signs point to continued acceleration. As AI adoption spreads across industries, the need for more powerful infrastructure will only grow. Celestica is a fantastic pick-and-shovel play on the AI revolution. Instead of betting on which AI software will win, you're investing in the essential tools every player needs. They have a transformed business model, deep partnerships, and a long runway for growth. Their ability to adapt and innovate ensures they'll remain a key player as the AI landscape evolves. This is how you find multi-bagger stocks, by spotting high-quality companies undergoing fundamental change. Celestica's story is still being written, and the next chapters look even more exciting. Celestica is a true hidden giant in the AI supply chain, quietly enabling the future of technology from behind the scenes. That's why it's my third unstoppable AI pick, an underappreciated powerhouse with the potential to deliver outstanding returns as AI continues to reshape our world. There you have it, 3 unstoppable AI stocks: AMD, the high-performance challenger; Broadcom, the unseen networking giant; and Celestica, the secret manufacturer. These companies are the backbone of the AI revolution and offer powerful ways to invest in its future. Put together, these 3 profiles tell a layered story. AMD is positioned as a fast-growth chip designer that the market prices for future upside. Broadcom is the huge cash-generating incumbent that benefits from scale and diversification. Celestica is the supply chain play that will see rising volumes as infrastructure spending ramps, but at a more measured valuation. Each name has a role in the AI build-out, and each comes with its own risk-reward profile depending on whether you want growth at a premium, steady cash flow at scale, or supply chain exposure with more modest expectations. Want to level up your investing skills? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now I want to hear from you. Which of these AI stocks do you think has the most explosive growth potential? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the bell so you never miss an update. Thanks for watching, and I'll see you in the next one. Stay smart, stay invested.